Hey guys, what's up? It's AB Trades, and today I wanted to talk about which contracts I pick, which contracts are the best, and how you can minimize your risk a lot when day trading options just by picking the right contracts. So please stay tuned.
To live life golden, yeah, we're golden, baby girl, we're golden.
So two things. First thing, why am I doing this video? Because I'm getting this question a lot with people who aren't trading SPX. They're trading like Netflix or like Facebook, where the contract prices are like 20 cents, 10 cents, 5 cents. Like, Austin, I know you trade dollar contracts, but is it okay to trade this? Yes, it is, and I want to show why. Second, I don't usually wear a muscle shirt, but I just came from the pool. It is Memorial Day, and I hope y'all are enjoying your day. And if you are of age to drink, make sure you're please drinking responsibly so that tomorrow we can hammer the market and that you are not hammered. So, let's get started. Um, so this is a chart of SPX. So if, like, let's say tomorrow, if I wanted to day trade a SPX put option, I would trade here because this is a round dollar price, right? Okay, now I'm going to show you how if you right click on the options table here, and you can, oh, I can add it to watch list. I didn't know that. So this one is the examples. Alright, sweet. So I added it there. Now versus a contract like this that's priced at $5. So let's look at the difference here. Alright, let's go to our charts and let's check this out. Alright, so the option price at around $1. So obviously you can see here that we have a strong base for this options contract placed around 83 cents. Okay, so what does that mean? So if I'm getting in for a put and I get it around $1 here, I'm risking it to go back down. So if I'm wrong, I can easily sell it around the 75 cent, 83 cent level here. I know that if I'm wrong from this dollar, it will go back to this normal base here, okay? So thus, on $1, if I sell it at, let's just say, a low point of 75 cents, I'm risking 25 cents a contract, okay? But I know that if I'm right, I can easily get it up to this previous high, or if it's a huge breakout, I can usually maybe get it up to $4. You see here? So I'm risking this much here on the contract price to get it all the way up to here, which is huge percentage. So now let's look at the same thing for here. So obviously we have a strong base at the $3.70 level, okay? Now if we go in and I buy it around this $5 level, I am risking all the way down to 370. So 370 minus 5, I am risking $1.30 a contract here to make the first resistance level would be around 770. So I'm risking $1.30 a contract to make about 220 or 270 a contract. So if we look at the first example, I'm risking 25 cents to make $3, or I'm risking $1.30 a contract to make $2. Obviously, my risk to reward is a lot better with the dollar contract. So that's when you're trading SPX. Now let's look at an example from a stock that most people would actually trade. So let's look at something where the contract prices are super duper low, like Facebook. So let's go into the trade tab and let's check this out real quick. So if I go into this week expiry, look, 75 cents, all this good stuff. Obviously, the open interest is huge. The volume is huge. You should be fine. But now let's take a look. So I've never looked at this for myself, but I just want to show y'all if we go a few, let's just say here, because that's add this to the examples watch list as well. Oh, every day. Sorry. I should have been more prepared, but it's Memorial Day, and I'm spending time in the pool and with family. Okay, so here we go. We just checked out. Oops. Oh, I'll do this. Okay, charts. So this is the one that's further out of the money. Let's go into this options chart here. So obviously we have a low point around 7 cents. So if I want to get in here for around 9 cents, I'm risking about, let's just say, 3 cents a contract here. Get it up to the first resistance level of 14 cents. to go up to, of course, a high of 28 cents. So I'm risking 3 cents here for a possible 4-cent move, or risking 3 cents for a possible, I don't know what this is, like a 20-cent move. Or if we're getting in closer in to the at the money, obviously a support level would be around here, and would be our resistance would be here. So if we look at these contracts, oops, I need to be able to see those. If we look at these contracts, if I buy it here at 77 cents, I'm risking it down to the 68 cents, or I'm basically risking 10 cents to make what is this? To make 20 cents. So I mean, you just have to look at your options contracts and look at where you have the biggest risk to reward. So when I'm looking at the contracts I want to play, I'm looking at ones that are near its base, that are close to the bottom of the contracts, because if I'm wrong, then I can easily sell it back at this support level. So I'm looking for the ones that are closest to the support, therefore I risk less and I have a better risk to reward. So obviously if we go further out of the money, I'm risking 3 cents for a potential 5 cent to 20% move, or cent move, not percent. And then here I'm risking 25 cents for a $3 move. So obviously you're just looking at the contracts that put you in the best situation for risk to reward. I hope that makes sense. If you liked it, please like, comment, and subscribe. And if you didn't like it, then dislike and tell me why. Thank y'all for tuning in. And if you're watching this on Memorial Day, stay safe.